There's been some good news about succession tax for residents from the Valencia community and the Balearics. So today Brett Hanson and I are going to take a look at Spain's inheritance tax. How are you doing, Brett?
Yeah, I'm good, thanks. Still hot, but I'm sure by the next time we speak, it'll be a bit cooler.
Let's have our fingers crossed on that. So, Brett, I hope you'll explain how it works, who it affects, and give us an update on the Balearics and the Valencia changes, as well as the Andalusia reforms from a couple of years ago. But before we discuss the recent reforms, Brett, what is the Spanish succession and gift tax? Is it similar to the UK inheritance tax? And who is liable for it?
So, Spanish succession tax and gift tax, Howard, is both an inheritance tax and a gift tax in Spain. And unlike in the UK, it's the person who receives the inheritance or gift that pays the tax, not the person or the estate of the person who has died or made the gift. And Howard, this succession or gift tax is payable in two situations. Firstly, if the recipient of the inheritance or gift is a resident of Spain, Spanish succession tax will be payable. This is regardless of where the assets being inherited or gifted are located. So in this situation, Spanish succession or gift tax will apply to all of the assets being inherited by the Spanish resident. Or secondly, if the asset being gifted or inherited is a Spanish asset, for example, a property located in Spain or a Spanish bank account. In this situation, even if the person receiving the asset or assets is not a resident of Spain, Spanish succession or gift tax will be payable on those Spanish assets. So, if the recipient is a resident of Spain, then Spanish succession or gift tax will be payable on all of the assets inherited or gifted. If the recipient isn't a Spanish resident, but the asset inherited or gifted is in Spain, Spanish inheritance tax will be payable on those Spanish situated assets. A good example of how this works in practice, Howard, is where you have, say, a retired married couple living in Spain and their wills leave their assets to each other. In such a situation, on the death of, say, the husband, the worldwide assets held in his name and half of the jointly held worldwide assets with his wife, i.e. his half of those, will pass to her, and the wife will be liable to Spanish succession tax on all of these assets as she is a resident in Spain.
Since many of our listeners are retired Britons, can you explain a little more about what happens if you die as a resident of Spain, but your heirs live in the UK? And vice versa. What happens if you live in Spain and receive an inheritance from the UK?
Well, continuing with the example I was just using, Howard, where you have a married couple living in Spain, let's now assume that they've grown up children living in the UK. So the husband has passed away and the wife, being a resident of Spain, has paid Spanish inheritance tax on any worldwide assets he owned, including half of the value of any jointly held assets. When the wife passes away, if her will states that all of the assets are to pass to the children who are living in the UK, because the children are not residents of Spain, then Spanish succession tax will apply, but only on the assets which are physically in Spain. For example, the Spanish property, bank accounts and/or investments which are physically in Spain. Any assets which are outside of Spain will not be liable to Spanish succession tax when passed into non-Spanish resident beneficiaries. And with regards to the second part of your question, Howard, if you are a resident of Spain and let's say an elderly parent passes away leaving you assets, this inheritance will be liable to Spanish inheritance tax because the person receiving the inheritance is a resident of Spain, regardless of where the assets are situated and regardless of where money from the inheritance is paid. And this inheritance would need to be declared to the Spanish tax authorities. Of course, in any of these examples I have given, there may be regional allowances and reductions which could minimise or completely negate these taxes, but this will depend upon the region you live in and whether the regional allowances would apply.
What sort of succession tax rates and allowances does Spain impose under the state rules?
Well, the state rates of tax start at 7.65% and rises as the size of the gift or inheritance increases to a rate of 34%. However, Howard, the rate of tax payable does not just depend upon the size of the gift or inheritance. It also depends upon the relationship between the person who has died or made the gift and the person inheriting or receiving the asset, along with the existing net worth of the person receiving the inheritance or gift. And so there is a multiplier to use, and the actual top rate of tax which can be applied can be as high as nearly 82%. In fact, a surviving partner from an unmarried couple living in Spain could find themselves paying taxes of almost 82% on any inheritance received from their partner. And whilst there are allowances, Howard, I'm afraid that at the state level they are very small, and like the overall tax rate, will depend upon the relationship between the person who has died or gifted the asset and the person who has inherited or received the asset, with beneficiaries divided into 4 groups depending upon the closeness of the relationship. So the state allowance is just under €16,000 for Group 1 and Group 2 beneficiaries, which are, for example, grandparents, parents, children and grandchildren. Other family members tend to just have around about €8,000 allowance, and everyone else doesn't have an allowance. There is, though, Howard, a 95% reduction against the inherited value of the main home of the deceased, but to benefit from this, the inheritor has to be a spouse, ascendant or descendant, or failing that, a remoter relative, but over the age of 65 and who has lived with the deceased during the 2 years prior to death. And that the property must be retained by the beneficiary or beneficiaries for 10 years following the death, though the property does not need to be the main home of the beneficiary or beneficiaries during this time. But it should be noted that the maximum reduction available here against the property, at the state level that is around €123,000 per inheritor. So Howard, it's definitely very important for listeners who are residents of Spain or who have assets in Spain to understand how Spanish succession tax and gift tax works and how this may impact them and their heirs. And it's certainly not something to be ignored or put on a list of things to look at some point in the future to then be forgotten about.
So why do we see so many variations across Spain?
That's a good question, Howard. While Spain sets state succession tax rates and exemptions nationally, each autonomous region, to which there are 17 across Spain, is politically individually controlled and have their own executive, legislative and judicial powers. And I would say there is a gathering trend among some of these towards relief or abolishing succession tax, especially in the passing of assets down the direct family line and between spouses. Another reason for the differences, certainly reported on recently with regards to the Valencia region, is due to the increase in the number of residents in the Valencia region who have renounced their inheritance, i.e. they have walked away from claiming them. Apparently, in the first quarter of this year, Howard, more than 1,500 residents of Valencia decided not to claim their inheritance, an increase of 24% on the previous year, because of the taxes they would have had to pay in order to be able to receive their inheritance.
Yes, I've heard of that happening. It's a paradox, isn't it? Really, very strange.
It is. You've got to pay money to get money, and normally the money you get is more. But if you don't have the money to actually pay the tax, you can't then have the inheritance.
Yeah. So let's move on with the good news now, starting with the Comunidad Valenciana, since you live there, Brett. And the regional government have announced some significant reforms. What can we expect to change?
Well, the president of the Valencian regional government, Carlos Mazón, recently announced proposals for a bill amending the succession tax rules applicable to this region. And the main proposal would introduce a 99% reduction in the succession tax liability for both Group 1 and Group 2 beneficiaries, i.e. for any inheritances received by children, grandchildren, parents and grandparents. And probably of most significance, I would say, spouses. This would align the rules with those already in place in Andalusia and Murcia. If approved, Howard, the changes would be retrospective for gifts and inheritances received after the 28th of May of this year.
The Balearics government has already approved a substantial change for its residents. What is the situation there now?
Yes, on the 18th of July, the government of the Balearics approved quite a substantial change to the succession tax rates applicable when it comes to inheritances, and have introduced a 100% reduction against the succession tax liability for beneficiaries in groups 1 and 2. So, as already covered, this is where assets pass to children, grandchildren, parents and spouses. There are some reductions also applicable to group 3 beneficiaries, but these reductions are lower, though still better than before, and will depend upon where in group 3 they come under and whether there are any descendants of the deceased. Whilst these initial amendments do limit the changes to Spanish tax residents, it is expected that further amendments may extend the scope of these changes to non-residents as well. These changes, though, are not retrospective, and so they only apply to both inheritances and gifts received on or after the 18th of July.
Andalusia improved their succession tax regime a couple of years ago. What are the key local rules there now?
The key improvement, which was introduced in Andalusia in April 2019, was the 99% tax relief available for Spanish succession tax on groups 1 and 2 beneficiaries after the tax rates and multipliers are applied. I believe that more recently they have also introduced a 99% tax relief along similar lines for lifetime gifts. But it's important to note that in order to apply for this relief on lifetime gifts, the gift has to be recorded in a public deed, and therefore a Spanish notary will have to be involved in this transaction. But from the 1st of January of 2022, I believe that Andalusia introduced a personal reduction of up to €1 million for inheritances received by Groups 1 or Group 2 beneficiaries, regardless of the pre-existing wealth of the individuals in those groups. Before, the reduction I just spoke about, which was introduced in 2019, wasn't applicable if the pre-existing wealth was above this limit. Likewise, since 2022, the 99% main home relief will also be applied without any limitation, though there are some requirements to be met in order to apply this reduction, Howard, such as the beneficiary who is inheriting the property must be either the spouse, an ascendant, descendant, or another relative over 65 years old and who has lived with the deceased the 2 years prior to their death, and the property has to be retained for a period of 3 years, not the 10 years required under the state rules. Though the law does not require the recipient or recipients to use this property as their main home for these 3 years, they do need to keep the property in order to benefit from the reduction.
So it seems that much of Spain is taking steps to protect the immediate family from inheritance tax. But what if you want to leave assets to someone else? Can anything be done to reduce the succession tax liability for them?
There are, Howard, and that's why if anyone listening to this thinks they may have a future Spanish inheritance tax liability or have concerns that on their death they will leave a loved one a Spanish inheritance tax problem, whether that's a spouse, partner, children, or someone the Spanish tax authorities regard as more remote, then they really should seek specialist advice from someone who can look at their situation, assess the potential tax liabilities, and provide solutions to minimise them, something which we at Blevins Franks have been doing for many, many years.
Well, thank you, Brett, for that. Interesting. Of course, people can look at the website and get all the information they need about the local partners and to make contact.
That's right. If listeners want to find out more about us or where we are, they can go to our website, blevinsfranks.com.
Many thanks, Brett. I don't know when we'll talk again, but I'll look forward to it.
Let's hope it's a bit cooler when we do.
I'm sure it will be.